Robinhood promised to democratize finance, but it may have just turned Wall Street into Vegas for beginners. When Robinhood launched in 2013, it broke every rule. No commissions, no account minimums. Just tap, swipe, and buy a stock. The app looked like a game because it was built to feel like one. Confetti, bright colors, a dopamine loop designed to keep you trading. But this wasn't Candy Crush. It was your life savings. Robinhood didn't invent retail investing, but it supercharged it. By 2021, it had over 22 million users. Most were young, most were new to finance, and most were encouraged to trade fast, often, and without fear. Because Robinhood made money. Every time you did, it didn't charge you directly. It used payment for order flow, sending your trades to big firms like Citadel and collecting a fee behind the scenes. The more you traded, the more Robinhood made. So naturally, it made trading feel like a game. Buy Tesla, tap, sell games, tap, buy a crypto coin you've never heard of. Tap, it wasn't investing. It was slot machines in your pocket. Robinhood branded itself as financial freedom, but created a casino where the house always wins. And it wasn't just stocks. It was options, complex, leveraged bets, with big risk and bigger losses. And the worst part, Robinhood pushed users toward them. The app made options feel easy, but for many, they were a trap. In 2020, a 20-year-old user died by suicide after mistakenly thinking he owed over $700,000 on an options trade. He didn't, but Robinhood's interface didn't show the real numbers, just red ink and fear. That tragedy forced the world to look closer, and what they saw was a platform engineered for addiction. It wasn't just regulators who noticed, so did Reddit. In early 2021, Robinhood became the center of the GameStop saga. Retail traders on our Wall Street bits pumped the stock. Hedge funds shorted it. Chaos followed. And when it peaked, Robinhood did the unthinkable. It froze trading. Users could sell GameStop, but not buy it. Prices crashed. Retail investors were furious. The narrative flipped overnight. From power to the people, to protecting Wall Street elites. Robinhood blamed clearinghouse requirements. They needed billions in collateral. But for users, the damage was done. The very platform that promised freedom pulled the rug out when it mattered most. Congress got involved. Lawsuits were filed. Trust was shattered. But the app kept growing because addiction doesn't die with scandal. It just reloads. Even as Robinhood added features like retirement accounts, its core remained the same. Quick trades, big swings, easy money vibes. And yet, most users lost money. A study by the New York Times found the more often Robinhood users traded, the worse they performed. And it wasn't small. Many lost thousands chasing hype. Because Robinhood didn't teach investing. It taught reaction. And while long-term investors build wealth, short-term traders build stress. So is Robinhood bad? Not exactly. It opened doors for millions, forced traditional brokers to drop fees, created financial access where there was none. But access without education, that's a loaded gun. Because investing is not entertainment. It's a discipline, a mindset, a long game. And Robinhood blurred that line, turning money into motion and motion into revenue. Today, the company is trying to evolve, adding out, expanding into international markets, launching credit cards and cashback tools. But his legacy is already written. Robinhood didn't just disrupt Wall Street, it gamified it. So, is it an investing app or a casino? The answer is simple. It's both. It's the tool you make it. Use it with caution. It's revolutionary. Use it with emotion. It's dangerous. Because the real gamble isn't the stock you pick, it's the way you think. And in the end, no app can fix that.